Hey everyone, and welcome to our deep dive today. We're going to be talking about market trends. So, imagine you're just starting your day, you got your coffee, you're ready to go, and you want to get a quick but super insightful look at what's happening in the markets. Stocks, tech, maybe even a little crypto and oil.
Yeah.
That's exactly what we're doing today.
Mm.
Unpacking this recent financial briefing to get to the heart of, what's really moving and shaking things in the financial world.
Yeah, it's super interesting because, a lot of these market movements we see every day, they might seem isolated, but they're all interconnected. It's like they're all pieces of a big puzzle
Right.
influenced by, larger economic and geopolitical forces.
Exactly. And speaking of interconnectedness, there was this one example in the briefing that I was reading that totally caught my eye. Apparently, there's this wild connection between a political rally that happened recently and how well the Trump Media and Technology Group stock is doing. Yeah. But before we get into that, I think we should probably start with a quick overview of where the major indexes are at, just to kind of set the stage.
Yeah, that's a great idea. I mean, context is key, right?
Yeah.
So understanding that overall mood of the market helps us really make sense of why, individual stocks are moving the way they are.
For sure. So let's see, the S&P 500 is down by 0.32% today, closing at 5,808.1. Dow Jones is also down, dropped 0.85% to 42,114.4.
Okay.
The Nasdaq is kind of, I guess you could say, bucking the trend a little bit with a tiny, tiny gain of 0.03%, reached 18,518.6. And last but not least, the Russell 2000 is down 0.79%, landing at 2,207.99. I know that's a lot of numbers, but what does it all mean?
Well, if you kind of take all those numbers together, they really point to a cautious market sentiment.
Gotcha.
And that's rooted in a few things. Primarily, we've got geopolitical tensions happening right now, and there are some ongoing economic uncertainties that I think are making people a little nervous.
Yeah, that makes a lot of sense, that investors would be a little, hesitant to kind of jump in with both feet right now.
Totally. Uncertainty, it breeds caution, right? It's like everyone's kind of waiting to see how things play out before making any big moves.
Definitely. Now, I'm super curious about this Boeing story. The briefing mentioned that they raised a whopping $19 billion in capital,
Wow.
and yet their stock price actually went up,
Mm.
which I would not have predicted.
It is interesting, isn't it? Because, Boeing is often considered a bellwether for the economy.
Right?
It's just such a massive company. It's got its hands in so many different sectors that how it performs can sometimes signal how other industries might be doing.
So are investors saying that they think the economy is actually doing okay then?
That could be one interpretation. It's almost like a vote of confidence in Boeing. And by extension, maybe like a cautious optimism about the broader economy. And just to bring back this interconnectedness theme, over in Germany, Volkswagen is actually closing 3 factories.
Oh, wow. That's quite a contrast. So we got some signs of optimism, some signs of trouble.
Yeah.
It's a real mixed bag out there. Speaking of mixed signals, what about that political rally and the Trump Media and Technology Group stock surge?
Yeah.
A 7% jump? That's a pretty big deal.
It is, and I think this example really illustrates how, investor sentiment isn't always purely logical or based on financial fundamentals, right? Like events and narratives, they can significantly impact how people feel about a stock. And in this case, that sentiment, it translated into a surge in the stock price.
Yeah, it's like the market is responding to the headlines, not just the balance sheets.
Exactly. And this is crucial, I think, for any investor to understand that human behavior in all its complexity plays a big role in the markets.
Okay, so I've got this kind of intriguing mix of economic indicators, right? And these unexpected connections between politics and the market. Now, let's shift gears to something that affects us all on a much more practical level. Oil.
Yes, oil, the lifeblood of the global economy. And it's been on quite a roller coaster ride lately.
Yeah, I mean, the briefing mentioned all sorts of factors at play: geopolitical tensions, OPEC production cuts, that upcoming winter demand. It's enough to make your head spin.
It is. And remember that, the oil market doesn't exist in isolation.
Right.
What happens with oil prices has ripple effects throughout the entire energy sector, impacting energy stocks and the broader economy as well.
Okay, so oil is volatile,
Mm-hmm.
and those ripples can spread far and wide. Got it. Now let's talk crypto.
Okay.
The briefing mentioned something about Metaplanet making a pretty big move in the Bitcoin market.
Yeah, Metaplanet has significantly increased its Bitcoin holdings.
Okay.
Which is notable, I think, because it makes them a major player in the Asian crypto market.
That's interesting. So it's not just individuals buying into Bitcoin anymore. We're seeing more and more companies get involved. Is that part of a larger trend?
It's certainly a sign of growing corporate interest in cryptocurrencies. And it's not just Bitcoin either. The briefing mentioned pairs like XRP and FlowBSD being actively traded on platforms like Binance.
Okay. So for those of us who aren't fluent in crypto speak, could you break down what those pairs mean?
Sure. So basically, those are what are called cryptocurrency trading pairs. XRP, ETH, Flow, and BUSD. Those are all different types of cryptocurrencies.
Right.
And when you see them listed as a pair, like, XRP, it means that you're trading one cryptocurrency for another. In this case, XRP for ETH.
Ah, okay, that makes sense. So Metaplanet's buying a lot of Bitcoin. Other companies are actively trading different cryptocurrencies. It sounds like crypto is becoming more and more mainstream.
It definitely seems that way. We are seeing, increased adoption from both individuals and corporations. So this suggests that, cryptocurrencies are becoming a more established part of the financial landscape.
Yeah. This is all super fascinating. So we've got a cautious market overall, with some glimmers of optimism, some signs of trouble, and then this whole world of crypto that seems to be gaining momentum.
It's a lot.
It is a lot to take in.
It is, and that's why, it's so important to understand all the different forces at play.
Right.
These seemingly random events, they're all connected in complex ways. And by understanding those connections, you can start to see that bigger picture.
Okay. So we've covered a lot of ground in this first segment from, bellwether stocks to political rallies and the wild world of crypto. It's clear that the financial markets are anything but boring. We'll be back after a short break to delve even deeper into these trends and explore, some of the potential opportunities and risks that they present. Stay tuned.
Welcome back to our deep dive into all the market movers and shakers. Before we jump into the next topic, I was thinking about that Boeing example we were talking about before the break.
Yeah.
You mentioned that it's considered like a bellwether.
Because its performance can be a signal for the broader economy.
Mm-hmm.
Are there other bellwether companies out there that our listeners should be, keeping an eye on?
Oh, absolutely. Think of them as signposts.
Okay.
Helping you navigate the complexities of the market.
Gotcha.
For example, in retail, companies like Walmart and Amazon,
Yeah.
they can offer some really good clues about consumer spending and confidence.
Oh.
Their massive scale makes them very sensitive to shifts in consumer behavior.
So if people are, starting to cut back on spending,
Right.
because of economic uncertainty, we'd probably see it reflected in Walmart and Amazon sales figures.
Exactly. Their earnings reports can be a very valuable gauge of the economic climate.
Gotcha.
In the financial sector, institutions like JP Morgan Chase or Bank of America,
Okay.
they can provide some insights into the health of the lending market and just overall financial stability.
So what kind of signs should we be looking for from these financial giants?
Keep an eye on their loan growth and delinquency rates.
Okay.
If those start to trend in the wrong direction, it could be an early warning sign of trouble brewing in the broader economy.
It's like having a set of specialized tools for reading the market's tea leaves.
Right.
So we've got retail giants for consumer spending, big banks for financial health.
Yep.
Any other bellwethers we should be adding to our watch list?
Well, don't underestimate the power of the tech sector.
Correct.
Companies like Apple and Microsoft, with their global reach and their innovative products, they can offer insights into technological advancements, consumer demand, and just the overall direction of the global economy.
It's amazing how the performance of just, a few key players can provide these really valuable clues about the state of the global economy.
Yeah, it's all about recognizing patterns and connecting the dots.
Right.
And speaking of connections, I wanted to circle back to something we touched on earlier.
Okay.
The influence of narratives and events on investor sentiment. We saw it with the Trump media and technology group and, that political rally.
Right.
But are there other examples where non-financial factors have moved the markets?
Yeah, I mean, the GameStop short squeeze comes to mind.
Oh, yeah.
That felt like such a turning point in how we view the power of social media and retail investors.
Absolutely. GameStop, that really demonstrated how collective action fueled by social media frenzy could disrupt traditional market dynamics.
Right.
It challenged the notion that that only institutional investors could move the needle.
So it's not just about, numbers on the spreadsheet anymore.
Right.
Public perception,
Right.
online trends, even memes can influence stock prices.
Precisely. The landscape is evolving, and investor sentiment is now being shaped by a multitude of factors, many of them outside the realm of traditional financial analysis.
Yeah. This makes investing feel like a lot more complex, but also a lot more fascinating in a way.
Right.
Okay. So we've talked about bellwethers,
Yes.
narratives,
Mhm.
and the psychology of the markets. Now, let's get practical. Given everything we've discussed, are there specific opportunities or risks that that our listeners should be considering in this current market environment?
Well, with all the economic uncertainties we've been talking about, it might be wise to consider what are called defensive sectors.
Okay.
These are sectors that tend to perform relatively well
Okay.
during economic downturns
Gotcha.
because they provide essential goods and services
Right.
that people continue to need regardless of how the economy is doing.
So things like consumer staples,
Right.
healthcare,
Mm-hmm.
and utilities, the
Yes.
things we can't live without,
Exactly.
even when times are tough.
Exactly. These sectors tend to be less volatile than others and can offer a measure of stability during turbulent times.
Gotcha.
On the flip side, growth stocks and cyclical sectors might face headwinds in this environment.
So what exactly are growth stocks and cyclical sectors?
Growth stocks are companies that are expected to grow at a faster rate than the overall market.
Okay.
They tend to be companies in industries with a lot of potential,
Yeah.
like, technology or biotechnology.
Gotcha.
Cyclical sectors, on the other hand, those are industries that are sensitive to the ups and downs of the economic cycle.
Mm-hmm.
So think of things like travel and leisure, luxury goods, or automobile manufacturing.
Okay. So these are industries that do really well when the economy is booming,
Right.
but could struggle when things slow down.
Precisely. If you're considering investing in these areas, it's important to be aware of the potential risks,
Right.
and to assess your own risk tolerance.
Okay. This is all really great information. Defensive sectors for stability, growth in cyclical stocks to approach with caution. Any other advice for navigating this uncertain market?
One of the most important things is diversification.
Okay.
Don't put all your eggs in one basket.
Right.
Spread your investments across different asset classes, different sectors, and different geographical regions.
Mm-hmm.
This can help mitigate risk,
Okay.
and potentially enhance returns over the long term.
So before we move on to our final segment where we'll explore some emerging trends,
Yeah.
let's do a quick recap
Okay.
of the key takeaways for our listeners.
Well, we've talked about the importance of identifying those bellwether companies and industries,
Yeah.
understanding the influence of narratives and events on investor sentiment,
Mm-hmm.
and recognizing the role of human psychology in the markets.
And on a practical level, we've discussed the potential benefits of considering those defensive sectors during uncertain times,
Yes.
approaching growth stocks and cyclical sectors with caution, and embracing diversification
Yeah.
as a key risk management strategy.
It's a lot of information to digest,
It is.
but hopefully it's provided our listeners with a more nuanced understanding of
Right.
all the forces shaping the financial markets.
Absolutely. Now let's shift gears and explore some emerging trends that could have a significant impact on the market in the years to come. Stay with us. Welcome back to the Deep Dive. We've covered so much ground today, from market sentiment and bellwether stocks to narratives, events, and even the psychology of investors.
Yeah.
Now, let's look ahead. What's on the horizon?
Mm-hmm.
What emerging trends are out there that have the potential to really, reshape the financial world as we know it?
Well, one trend that is pretty much impossible to ignore is the rise of artificial intelligence, or AI. It's transforming industries, everywhere you look, from healthcare to manufacturing. And finance is certainly no exception.
AI in finance. That sounds like something straight out of science fiction.
Right.
Are we talking like, robot stockbrokers taking over Wall Street?
Not quite that dramatic, but AI is already playing a significant role in finance. It's being used for fraud detection, risk management, giving personalized financial advice, and even algorithmic trading.
Wow.
Think of it as like augmenting human capabilities, not necessarily replacing them entirely.
So AI is like a powerful new tool in the investor's toolkit.
Exactly. AI can analyze vast amounts of data, like way more than a human can.
Right.
Identify patterns and make predictions with speed and accuracy that really surpasses human capabilities. And this can lead to, more informed investment decisions and potentially higher returns.
That all sounds very promising. But are there any concerns about, using AI in finance?
Well, there are always concerns when new technologies emerge, right?
Right.
Especially in a field as important as finance.
Hmm.
Questions about, potential bias in the algorithms, data privacy, and the potential for misuse are all things that are being actively debated.
So it's important to, approach AI in finance with a balance of optimism, but also caution.
Exactly. Like any powerful tool, AI can be used for good or for ill. The key is to ensure that its development and deployment are guided by ethical considerations and a real focus on transparency and accountability.
Okay. So AI is one big trend to watch.
Mm.
What else is on the horizon?
Another trend that's really gaining momentum is the shift toward sustainable investing, also known as ESG investing, stands for environmental, social, and governance.
I've heard that term, ESG,
Hmm.
but I'm not entirely sure what it means in practice.
Hmm.
Can you elaborate on that?
Yeah, so essentially ESG investing means considering factors beyond just, the financial returns.
Okay.
Investors who prioritize ESG are looking for companies that demonstrate strong environmental stewardship,
Gotcha.
social responsibility, and good corporate governance practices.
So it's not just about making money. It's about aligning your investments with your values.
Precisely. And this is resonating with a growing number of investors, especially millennials and Gen Z,
Right.
who are much more acutely aware of social and environmental challenges and want their investments to reflect their commitment to positive change.
It's fascinating to see how, social values are increasingly influencing the financial markets.
Yeah.
Is there evidence that that ESG investing can be financially rewarding
Mm-hmm.
as well as ethically sound?
There is. Research suggests that companies with strong ESG practices often outperform their peers over the long run.
Okay.
And this is likely because they're better positioned to manage risks, attract and retain top talent, and build strong relationships with their stakeholders.
That makes sense. So ESG investing isn't about sacrificing returns for values. It's really about finding companies that are both profitable and responsible.
Exactly. And this aligns with, the growing understanding that sustainability is not just a moral imperative, but also a smart business strategy.
So we've got AI transforming how we invest and ESG reshaping how we choose where to invest.
Right.
What else is shaking things up in the financial world?
Well, the evolution of the cryptocurrency space continues to be a major force.
Okay.
While Bitcoin and Ethereum remain, the most well-known cryptocurrencies, we're seeing the emergence of new blockchain technologies and a whole ecosystem of decentralized finance applications, or DeFi.
DeFi, that's one I haven't heard of before.
Yeah.
What's the basic idea behind DeFi?
It's all about creating a more open, transparent, and accessible financial system. Think of it as cutting out the traditional middlemen, well, like the banks and other financial institutions,
Okay.
and enabling peer-to-peer transactions directly on the blockchain.
So DeFi is like a financial revolution
Mhm.
powered by blockchain technology.
That's a great way to put it.
Wow.
It's still early days, and there are certainly risks involved.
Right.
But DeFi has the potential to disrupt the financial industry in some really profound ways.
It's incredible to see how technology is, reshaping the world. And the financial markets are really at the forefront of this transformation.
Yeah.
It's a lot to keep up with.
It is, but that's also what makes it so exciting. The financial landscape is constantly evolving, and those who embrace lifelong learning, who stay informed, and who adapt to change will be well positioned to navigate the complexities of the market.
So what's the key takeaway you want our listeners to walk away with today?
The financial world is a dynamic and complex ecosystem, but it's also full of opportunity.
Right.
By understanding the forces at play, by embracing emerging trends, and by continually expanding your knowledge, you can empower yourself to make more informed decisions and achieve your financial goals.
That's a great way to wrap things up. Remember, listeners, this is just the beginning of your exploration. Keep asking questions, keep learning, and keep diving deep into the fascinating world of finance. Thanks for joining us on this deep dive.